Here with the fuzzy, I think, and he's the mortgage.
Thank you guys for coming out on Saturday. So, am I good right here? Yeah, live. Okay. So, everybody here first time home buyer?
Yes.
Yes? Okay. All right. So, let me ask you guys. There's three of the most common programs that we offer as mortgage brokers, and I want to see here if you guys are familiar with them as far as loans. Conventional loans, government loans, and non-QM loans, right? Now, does anybody know what a conventional loan is? No? Okay. So conventional loan is a Fannie Mae or Freddie Mac loan, right? Typically, most people think of those types of loans as requiring 20% down or more, right? And in actuality, as a first-time home buyer, there's actually programs that allow you, as a conventional loan, to put down as little as 3%. So that's one of the most common loans that we offer. In addition to that, we have what's called an FHA loan. Is anybody here familiar with an FHA loan at all? Okay. Do you guys know what the minimum down payment is for an FHA loan? Say again? Tell us. I want you guys to be involved too now. I want you guys to get involved as well. So the minimum down payment for an FHA loan is actually a little bit more. It's actually 3.5%. Right now, a lot of people hear these things and they think, well, what is the difference between me qualifying for a conventional loan versus an FHA loan, right? There's quite a few differences. Now, the third most typical loan, before I go into the differences, is what we call a non-conventional loan, right? And this is kind of the bucket that everything else falls into, right? So like, for instance, if you don't necessarily have the full documents, maybe you have bank statements because you're a business owner, right? And you deposit a lot of money in the bank, but you don't really show it to the IRS come the end of the year because, like most business owners, what do? You write everything on, right? You go out, you buy a T-shirt, that's a write-off. You go out to eat, that's a write-off, right? And that's the beauty of this country, right? It allows you as a business owner to be able to take advantage of those things, but it does hurt you when it comes time to qualify for a mortgage. So there are other products out there, such as bank statement loans, such as investor cash flow loans, what we call DSCR loans, which we qualify you based off of the income of the property rather than your income, right? And other loans that require alternative documentation. Now, when it comes to the differences in requirements between all of these loans and the way that we are going to qualify you as a mortgage broker, there's quite a difference when it comes to certain things such as credit. So is anybody here familiar with what the minimum credit score is for a conventional or an FHA loan? No? Okay. 620? Okay. So that's conventional. And for FHA? Anybody want to take a guess?
650.
650? You think it's more? 580? Okay. So actually, it is 580 if you want to put down 3.5% or the minimum. But with an FHA loan, you can actually have as low as 500 credit score and still qualify with 10% down. And in actuality, with FHA, you could have no credit score, and we can use alternative trade lines such as like electric bills, utility bills, your current rental histories, right? If we can get a verification of rent from your landlord, and things of that nature to also qualify you. So the requirements are not as high as typically most people would have you think, or what most people probably think, right? Now, there are some differences as well when it comes to the maximum loan amounts that you can qualify for these programs. Is anybody familiar with what the maximum loan amount is right now for FHA or conventional in South Florida? Okay. All right. So the maximum loan amount for an FHA loan right now in South Florida is $575,000. Right. Now that's maximum loan amount. Remember, you still have your down payment that you have to put on top of that, right? Which is just 3.5%. So if you're putting, that's for FHA, correct. So the maximum loan amount currently for FHA And here in South Florida, for a single family home, it's 575. Now, granted, FHA actually allows you guys to go up to 4 units, right? You can either get a single family, a duplex, a triplex, or a fourplex. And going up into 4 units, that amount actually increases to over $1 million. The more units that you go up. For the duplex, it's about 100,000 more. Don't quote me on the exact amount, but I believe right now it's like 685. And I could get you more information if you're interested specifically in duplex. But the range is going to be right now between a single family from 575 all the way up to a little bit more than $1 million for you. So again, that amount will vary depending on the number of units that you guys are looking for. Now, when it comes to a conventional loan, it's a little bit different, right? With FHA, if you're buying more than 1 unit, you can still qualify with your 3.5% down. With a conventional loan, the limits are higher. So a conventional loan right now for a single family home, your maximum limit is actually 775. Now, if you're looking at 2, 3, or 4 units, right? The max being 4 units, right? The reason why the max is 4 units, just so you guys understand, is anything between 1 to 4 units is considered residential. Anything above 4 units is what we consider commercial, right? So with conventional, you can actually go up to 4 units as well, but that down payment increases for every unit that you add, right? So for instance, at 1 unit, if you're a first-time home buyer, you can qualify with as little as 3% down on a conventional loan. But once you go up to 2 units, now you're talking about putting down 15%. You go up to 3 units, you're talking about putting up 20%. You go up to 4 units, and now you're at 25%, right? So if you're looking, for instance, to buy a multifamily, right? Typically, FHA is going to be your best place to start because it allows you to buy with that 3.5% down, no matter how many units you're looking at, up to the 4 units where it's still considered residential. Exactly. Now, as everybody here is a first-time home buyer, I'm guessing that most of you guys are here to hear also about a lot of the down payment assistance programs, right? That are available. Are you guys familiar with any of the down payment assistance programs right now that are available?
I know in the $40,000.
Okay.
Would help you.
Yes, through the city of North Miami. Correct. Okay. Okay. And is everybody here looking in Miami-Dade County, more or less?
Not I am now.
Okay. But in my,
Just like 2001.
yeah. Well.
Yeah.
Oh yeah. Well, you don't worry.
Get mine.
Don't worry. For that, we're gonna get you a mortgage.
Yeah.
So Miami-Dade actually has a really great program right now for first-time home buyers. That is it's for anywhere in Miami-Dade County. So it doesn't matter. You could be looking in North Miami, or you could be looking as far down south as Florida City. Anywhere in Miami-Dade County as a first-time home buyer. And actually, I take a step back because they recently changed the guidelines. You actually don't even have to be a first-time home buyer anymore. I recently found out that you just can't currently own a house. They changed the guidelines at the end of 2022. Now,
That's just for my.
that's just for Miami-Dade. Now, Broward has a program as well, so that's why I asked where you guys looking. Because I'm going to start off with Miami-Dade, and then if you're looking at Broward, I'm going to get to Broward as well. Broward's a little different, so I'm going to.
So you inherited a home. Are you still qualified for first?
If you inherited a home, no, because you're on title. So if you're on title on a house currently, then you're not considered a first time. Right? You'd have to remove yourself from that. But here's the beautiful thing about this program Miami-Dade County has now, that they changed their guidelines where you actually don't have to be purchasing now your first home, you just can't currently own a home. So if you, for instance, inherit a home, and let's say you got to do probate, and you sold it because you had 2 or 3 other people that were in it, and now you want to go buy your first home. As long as you currently don't own a home, you can actually now qualify. That rule recently changed. It used to be that you couldn't have owned a home for the past 3 years, but they've actually made a lot of changes recently to that program, which are, to me, it's the best program in the world.
But that's just Miami-Dade?
This is for Miami-Dade that we're talking about now. I'm gonna get to Broward, but I want to start with Dade. So with Dade County, right now they're giving up to $28,500 for a buyer, right? Again, you don't have to be necessarily first time home buyer. You just can't currently own a home, right? You can't be on title. So for instance, if you inherited a house, you can't still be on title now. If you inherited, you sold it, that's not it, right? Now you're gonna qualify based off of the size of your household and your income of that household, right? So right now, the minimum that they're giving is 14,500. Yeah, or you'll get 28,500, right? The 14,500, right now you can make up to almost $180,000 and still be able to get that money depending on the size of your household, right? With the 28,000, that amount is obviously much less, but you can still make in the six figures and get that money depending on the size of your household. Now, the great thing about Miami-Dade's program is, unlike a lot of these other programs like Broward or even through the state of Florida, there are no additional restrictions, right? So typically when you get down payment assistance, it kind of limits how much we can pre-qualify you for because they're a lot more stringent with their guidelines than we are as a lender, right? Because they want to make sure that you're in the best position to be able to afford the home. So it does limit you sometimes, but the great thing about this program is there are no limits. So there's no minimum credit score, right? There's no maximum, what we call DTI, right? Which is how we qualify you. By the way, is anybody here familiar with that term?
No.
DTI? Okay. So this is the number one factor of how we, when you come to us as a mortgage broker or as the bank, how we qualify you for a mortgage, right? DTI is simply your debt to income, right? And we take that as a ratio. So just to kind of give you guys an example, let's say you make $60,000 a year, right? When we break that down into monthly salary, that works out to $5,000 a month, right? $60,000 a year, $5,000 a month. So out of that $5,000, we want to determine what percentage of your income is going towards debt. So for instance, let's say you have a car loan, right? What's the average car loan right now? Maybe like $500? $700? Okay. All right. So let's say $700, right, for a car loan. And let's say you have another, I don't know, $200-$300 for credit cards, and your total combined debts right now that you have between your credit cards and your car loans and everything is $1,000, right? Now, the maximum debt to income ratio that we're typically used to allow is 50%, right? So if your income is $5,000 a month, then we're not going to want to see to be able to qualify for a traditional loan. We're not going to want to see that you have more than $2,500 worth of debt, including the new mortgage, to be able to qualify, right? So if you have $1,000 worth of debt currently, right, that means that you have a wiggle room of $1,500, right, for us to get to $2,500, right, which is half of what you make, right? So if you make $5,000, you take 50% of that, that's $2,500. All of your combined debts, right, including what you currently owe plus the new mortgage, cannot be more than $2,500, right? So typically, and the reason why I wanted to bring up this example is because with a down payment assistance program, they'll put maybe an additional restriction on that, where it will be capped at, say, 45% instead of 50, right? So now that takes you down from having the buying power of being able to afford a $1,500 mortgage now down to a $1,300 mortgage, right? Which in terms of what you qualify for can be a big difference, especially at that purchase price, right? So again, it's a really great thing that these programs have no restrictions when it comes to that. And it's a big thing because, like I said, most of the majority of down payment assistance programs in this country have those additional restrictions. So, this program has no minimum credit score. It has no maximum ETI. Whatever we could qualify you for as the mortgage company and whatever we can get you approved for is basically how much they're going to allow you to be able to qualify for with either that 14,000 or with the 28,000. Now, in Broward also has some programs where Broward actually will give you up to $80,000. Now, the only caveat with Broward is Broward does have some of these restrictions, right? And Broward also has basically what's called a first come, first served policy, which means that the money's not always available, right? Like it is in Miami-Dade. It really depends on what city and what district or what part of Broward you're looking at, right? Because Pompano might have money, but Plantation may not, right? Or Hollywood may have money and Dania Beach may not, right? So, if you guys are looking in Broward and you guys are looking for obviously down payment assistance, that's something that, as you're looking and you're communicating with us, we can tell you, hey, these are where funds are currently available. But that is the one caveat with Broward, right? You do get potentially more money, but again, it is first come first served basis, and there are some additional restrictions. So Broward's right now, I think their maximum purchase price is $388 and some change. I don't know the exact. I don't want to tell you the exact number, but I know it's $388. And they have a maximum DTI, which is 45%, which will kind of lower how much you may be able to be approved for typically if you're looking in Broward, right? It may cause that amount to drop down a little bit. Now, do you have any nurses, educators, law enforcement, military, anybody in those categories?
Yeah, so I had a question before you got to that part. You said something about it's lower when what if we find a home together? Does that help?
Absolutely. So the more income, the better, right? The more you can qualify. So the key is it absolutely. If you want to qualify for more, right, we want to make sure that we have as much income as possible and that we can eliminate as much debt as possible, right? Or at least be able to have enough income to exceed that.
And then if we both was purchasing a home, if I own homes and he doesn't, would he be able to qualify for the first time?
So again, the only way you can qualify for these well, specifically Miami-Dade, you can't currently be on title. Now in Broward and these other down payment assistance programs, you have to wait 3 years, right? So for instance, if he wanted to qualify again as a first-time home buyer, you have to either remove himself from title, sell the house, and then wait 3 years. Again, this is Broward and other counties or the rest of the state of Florida. Miami-Dade would just be current. Now, there's also another program called the Hometown Heroes program. I'm not sure if any of you guys are familiar or have heard about that. Hometown Heroes? Okay, so this is a program specifically for the industries that I just mentioned, right? So anybody who's in healthcare, education, and when I say education, not just like K through 12, it could be daycare, it could also be higher education as well, right? Law enforcement, not just at a local level, it could be state, it could be federal, firefighter, and military, right? The state of Florida has a new program that they just came out with last year called the Florida Hometown Heroes program. Now, the really cool thing about it is we can actually stack some of these programs, right? So if you fall into one of these industries or one of these categories, we can actually combine the two where you can get up to $25,000, which is what Hometown Heroes will give you, right? They cap it at $25,000. Now, it's either $25,000 or 5%, right? So whichever one is less, right? 5% of $500,000 is $25,000. So pretty much once you go above a $500,000 purchase price, the maximum that you're going to get for the Hometown Heroes is that 25,000. Anything below $500,000, you're going to get whatever 5% of exactly that amount, right? Now, there are some restrictions when it comes to the Hometown Heroes program, right? They do have a maximum DTI, right? Depending on your credit score, we may actually be able to go up to the 50%, right? If not, we may be limited at that 45. The minimum credit score for that program is a 640. So there is an actual minimum credit score that they have a requirement in addition to whatever it is that obviously you qualify for, whatever that be, whether FHA or conventional loan or non-conventional loan, right? Yes, this is if you're in healthcare. This is if you're in education. This is if you're in a law enforcement or firefighter or military, right? Any one of those 5 industries, you could qualify for up to that additional 25,000.
That's the first time.
And that is for first time home. Correct. So you can't just be in that industry and I'm going to go buy my 3rd house and then you get $25,000. You have to be a first time home buyer for these programs. But the good news is everybody here is. So, if you are in that industry, obviously you guys would qualify. And yeah, I know we got a lot more speakers here, so I don't want to take up too much time. But
I would like for everyone to just write down their questions that they have, and then when everyone gets done speaking, then we can go back.
Absolutely. So yeah, if you guys have any questions, I'm gonna be here. Obviously, everybody who's registered will be in contact with you guys. How much you qualify for, what down payment assistance programs are available out there for you. I don't want you guys to be too worried about that here, right? I just kind of want you guys to soak in this information. Of course, once we go through the entire process of being able to get you pre-approved, right? We're gonna request certain documentation from you, right? So just so you guys can be kind of prepared, right? Depending on if you're a W-2 employee, right? Typically, we're gonna ask for 2 months bank statements. We're gonna ask for 2 years worth of W-2s. We're gonna ask for 30 days worth of pay stubs, which is typically 2 pay stubs, right? If you get paid every 2 weeks or twice a month, and a copy of your driver's license, right? Very, very basic information. Typically something that not only require you to search for more than a couple minutes on your computer, right? If you're self-employed, obviously you don't get W-2s, right? So we go based off of your tax returns, right? And sometimes that could be 2 years worth of tax returns, or if you had a business for more than 5 years, we could actually do it based off of 1 year tax returns if our system that we use, right, allows it, right? And again, that's depending on if the business has been around for 5 years or more. So, if you guys are self-employed and you haven't filed taxes, it's not necessarily a bad thing, right? Because we're in tax season now. That's certainly a conversation that, you're going to want to have with us prior to filing your taxes if you're self-employed. Because, at the end of the day, there are certain things that we can add back in to be able to have you qualify for mortgage, even though for tax purposes, they're write-offs, right? So, for instance, and I'm just going to throw a quick example out there. If you guys bought a car, right, or you bought a truck or anything like that for the business or that you're using for the business, the IRS actually allows you to write it off as what's called a Section 179 expense, right? Which is what's called a depreciating asset, right? It's an asset for the business or it's an asset to you as a self-employed person or as a business owner, right? Because you can write that off as a depreciating asset, and you can take the full depreciation, right? Even though for IRS purposes, it is a valid write-off and you don't have to pay taxes on it, right? Because it is an expense. When it comes time to calculate your income for a mortgage, we can actually add that income back in to where even though maybe you bought the car for $50,000, you wrote it off and you paid 0 taxes. Now, when I'm reviewing your tax returns, I'm able to add that $50,000 back in and qualify you based off of that $50,000 asset that you purchased that you were able to write off in that way. But again, there's very specific deductions and very specific line items that we are allowed to add back in when it comes time to calculate the mortgage. So if you guys are self-employed, definitely the biggest thing that you guys want to do if you're looking to purchase before you file taxes is sit down and have a consultation with us so we can take a look at everything, right? And run the scenarios to make sure that obviously you guys aren't going to be shooting yourselves in the foot. Now, that's pretty much it for me. I'm going to hand it off to the lovely ladies. Yes, and again, Yamani Mason with Secure the Funding. I'm going to be sticking around afterwards. So if you guys have any questions, I'll be reaching out to each and every single one of you guys that registered as well with my contact information. So, you know, I'll be able. I forget we're on live. So if anybody wants to reach me through live, my cell phone number is 786-560-4067, or you can call our office line at 305-433-7194, or you guys can visit our website, which is simply securethefunding.com. And thank you guys for your time today. I will introduce the lovely ladies of Celtic Luxury Real Estate. Thank you guys for your time.
Thank you so much, Imani. I'm sorry when I came up earlier, I don't remember saying my name. My name is Louise Belzins. I'm the broker owner of Belzins Luxury Estate. We got our lovely agents, and we also have Shauna, who's one of our agents as well. You're gonna have to move this over here. I'm just moving around. It ain't gonna work. Oh, but you have to like that. Okay, I'm sorry, guys. We're gonna be a little bit moving a little bit of everywhere, okay? All right, so up first, we're gonna have Stacey Chambers, one of the realtors with us.
Hello, everyone. So my name is Stacey. I'm just going to introduce myself. My name is Stacey Chambers. So my name is Stacey Chambers. I'm a married mom of 2 girls. My educational background is dentistry and criminal justice. And what led me on the path of real estate is because I had a bad experience with a realtor. And I just felt like he didn't have my best interest at heart. He more so cared about closing a deal instead of, you know, my needs and wants as a client. So my goal as a real estate agent is to give you guys, you know, top tier service and build long-term relationships and bonds with my clients. And there you have it. Thank you.
Okay, up next, we're gonna have Brianna Lane.
I'm kind of nervous. My name is. Hello, everyone. I'm going to just say a little bit about myself. My name is Brianna Lanier. I joined Belzins Luxury Estates a little months ago when I first started my real estate career. I was kind of nervous to speak today because I'm not a speaker, but I just remember being in the same seats that you guys are in at the Leeds History Network Advice Seminar, and I remember leaving that seminar not only gaining so much knowledge on the home ownership process, but I actually became a realtor myself because of the process. So when you talk about home ownership, I think owning a home is very important. I mean, you just have to educate yourselves. I mean, the process can get discouraging because of the criteria you have to meet to become a homeowner, especially when they're making renting so easy. You can easily what they ask for, a couple of pay stubs, your ID and a social security card, and you in the door. But you got to get out the door when they let you know when your lease is up, you need to go. So don't think the process is so difficult or so hard. It's just a longer process. I mean, you have to put more into it because you want more out of it. So great things take time, and don't let the criteria discourage you from what's better for you, what's beneficial for your future. I get asked a lot of times why buy in this market, and I had a client the other day. I did a follow up on her. She was like, "Brianna, I'm just not ready to purchase a home right now. The interest rates are way too high. You know, I'm gonna just wait another year or 2 years." Let me tell you something. It's never not a good time to purchase a home. Regarding interest rates always fluctuate. So sometimes once the interest rates go down, you can always refinance your home. So
Yeah, you'll always refinance your home. If you can afford it, if you can afford the mortgage payments, then you're ready to go. All you gotta do is take the necessary steps to get to the closing table. I mean, to be honest, if you can afford today's rent market, you can afford a mortgage. Period. Right now, one bedroom is going for what, at least $2,400, $2,300. That's a mortgage. $2,800. That's a mortgage right there. That's a single family home, 3-2. So to me, home ownership represents stability, it represents independence, it represents freedom, it represents wealth. My grandmother used to always tell me, you have to want to be the investor, be the transaction. And speaking of my grandmother died not too long ago from COVID, and she not only thought about the future, but she thought about me and my sisters as well. She left me and my sisters multiple homes paid off. So right now we're just paying the taxes on all those homes. And she not only thought about her future, she thought about us, and it just opened my eyes to the bigger picture of long-term, longevity, generational wealth. She made me focus more on building assets and less liabilities. And I want that for my kids and my kids' kids. That's why I got my daughter here today, because, when I'm 18, I'm about to move out the house, girl. When you turn 18, 19, I want you to set yourself up so when you leave my house, you're not going to go rent somewhere. You want to go buy your first time home, and it's going to be valuable. So thank you.
Let's continue back off of what Brianna said, when everyone said that and we're gonna get back to that, when everyone says they're waiting for the interest rates to go down. The only reason why the interest rates were down that low is because we were in a pandemic. And we're no longer in a pandemic, and everyone that's waiting on the interest rates to go down, have been on. Okay. Next, we're gonna have, Ruth.
Yeah.
King. Oh.
Hey everybody, my name is Ruth King. You see me walking back and forth. That's my clan over there. So I'm 26. I'm married with 4 babies. This is actually the first year that I haven't been pregnant since 2018. Yeah, it's been real. And being had. My pastor actually became my business mentor. He told me, I believe it was last year, she told me that she saw me doing real estate. I said, oh, okay, so let me call my license, let's go. And she introduced me to Louise, and I remember Louise because she was helping my pastor find a home. And when I saw her, going to the office and showing my pastor the home and how beautiful the homes were, I was like, I could see myself doing this. So I thought it was amazing that years later, I think I was pregnant with my second child at the time. Years later, I got back connected with Louise, and now I'm here. And just the importance of it, just to stress and piggyback what Brianna said, like just making life better for your children. Each one of them home by 18, meaning they each have their own property by the time they're 18. I don't want them to go through things that I went through. I have had to do it basically all on my own until now. I had to get my own car, I had to look for a job. My dad left the home when I was like 15. And there was times when the lights were off. I didn't have anything to eat after school. I missed school, just everything. It was very, very hectic. But just now the importance of having a home. I love the experience of being able to help someone find a home. Whether you have the money, whether you're on Section 8, whether you're trying to figure stuff out, it doesn't matter for me. I know what it's like to be homeless. I know what it's like to not have anything. So when I'm able to help somebody find a place where they feel like they can breathe, that's everything for me. That's absolutely everything. Because I know what it's like not to have anything. I know what it's like to stay with people that didn't want you there. I know what it's like to have parents that didn't want you in their house. I mean, I know it all. So just the experience of, looking for a home, that's so exciting. It's so exciting because you get to see, and especially working with a realtor, it takes off so much pressure from yourself because you're not having to, okay, well, let me go on apartments.com. Let me go on Zillow.com. So you have to call the people. You gotta pay $100 for every application fee. That's ridiculous. I'm gonna spend like 500 and I'm still not moved in nowhere. And now they're asking for like 650 credit scores. Just for an average apartment application, they're asking for a 650 credit score. So I can get inside an apartment that's $3,000 a month with a 650 credit score. But on the same other hand, I can qualify for an FHA loan that's 580, 500, or no credit, and get inside a home. That doesn't make any sense. It's crazy. But a realtor will be able to tell you that. So you might think, oh, well, I just need an apartment because that's what I can afford. But a realtor can open you up to a whole book of knowledge that'll let you know, no, listen, you can have this, you can have this, you can afford this. So you present your budget, and the realtors basically make magic happen. And after that, when it comes to finding out, what kind of neighborhood do you want to live in? Do you have kids? Do you want them to go to a particular school? What is your career? Is your home going to be near your job? Do you work from home? If you work from home, are you in an area with good signal or bad signal? I mean, it's so many different factors, and that you wouldn't think of because all you're thinking about is just getting home. But a realtor can help you with that. So again, my name is Ruth. I'm building my brand as a model realtor. I also model in New York Fashion Week and Miami Swim Week. And I want to build a brand where I provide excellent realtor service. So it's not just, okay, well, she's just getting in the house to get the money. No, I know how important it is for you and your family to be in your home together at peace, not scared that someone's going to come and take it, not scared that someone's going to try to evict you wrongfully. So, yeah, that's me.
I'm gonna have Carmen Sinclair. Okay. Hi, my name is Carlene Stapler. As Louise mentioned, I'm going to introduce myself briefly, and then I'm going to jump right into the actual home buying process. So, again, my name is Carlene. I am a social worker. I hold my master's degree in social work. I work full time at Jackson Memorial Hospital, and then I also became a realtor. Why I become a realtor? So a few years ago, like 6 years ago, I don't remember when it was, I was purchasing my home, and at that time, till today, my realtor don't know what my house looks like. So literally. It was the worst experience of my life. She never had time. Every time we wanted to go see a property, it was already sold because she didn't have time for us to go see it. So one day I was just like, you know what? There you go. I did it all literally. Like I went to go knock on the door. She's like, oh, just ask them, can you see the house? And you have a realtor, but they'll come later. So I literally went there. I knocked on the door, and I'm like, listen, I'm interested in buying this house, but my realtor is not available. Can you please let me see the house? And that's what happened. I saw the house, put in an offer. The offer was accepted. A lot of things happened along the process to the point where before we can even close, I was at the house painting outside with a paintbrush and everything. She didn't show up to my closing. Nothing. So literally. So with that being said, I just knew that, like, I went through so much during that time. I just knew that I would never want anyone to go through that process because it really didn't make sense. So that's why I'm here today. So now home buying process. I know Yamani touched bases a little bit on the process of like funding, pre-approval, and everything. So when you get that grade O pre-approval letter, once you are pre-approved, the next step, of course, is to search for your dream home. So what happens with that? One of the things that we always ask in that process of you searching for your home is for you to identify your do's and your don'ts.
what are the things that you want, what are the things that you don't want in your home, what are your non-negotiables, and that's probably one of the most important things. Are you looking for something that's more updated? Are you looking for space but don't mind doing upgrades after you get the home? So typically before you go out home shopping, we do require pre-approval, and outside that pre-approval, some of the things that you want within the home.
There's nothing like from you're not, we talk about what like you're right, you know, this home, you're not even qualified for this home, so you're wasting her time and your time as well. We have to be, you know.
Right. Once we go home shopping, we want to kind of not take you to places where you might not be qualified for that home, or it's not something that you don't want, because once you become disinterested, it's really hard to get back on that bandwagon because it can be a lengthy process. So we do ask that you identify your do's and your don'ts. What are you looking for? How many bedrooms? So that way we make sure that when we're sending out homes to you, that it is within your taste, what you want, and what you envision yourself living in, because it's not a short-term investment. This is a long-term investment. So once we've actually gone out, we've seen the homes, and then you identify the home that you want, then comes the process of putting in an offer. Now, when it's time for you to put in your offer, what your realtor would typically do is do a CMA, which is a comparative market analysis, which they'll look at other properties within that area that you are looking to purchase to see within the past few years, how much did this property sell for, how much did that property sell for, so that way when you're making an offer, you're coming to the table with the best offer, because the offer makes a big difference. You come to the table, you provide your offer, and at that point, that listing agent or that seller that's selling the home will look at the different offers that are on the table, and we would always want our offer to be the one accepted. So we always try to make the best offer, and the realtor will allow you to, we'll go through that process with you to say, hey, they might be asking this amount. I think we should come in at this amount, and the reasons why you should come in at that amount. From making this offer, once your offer is accepted, you're officially under contract. And at that time, typically when you're under contract, there's a lot of things that happen from that point once you're under contract. One of the things being one of the most important parts of the home buying process to me, which is your inspection. Now, when you get your home inspection done, you're going to have there's a professional that comes out that typically assesses the home from head to toe to make sure that you're investing into this property and making sure it is what it needs to be. From looking at the roof, looking at looking at the electricity, looking at everything, so that they make sure that the home is prepared for you to purchase it. From that point, once you actually get the inspection done, and they'll provide us with like an inspection report. Once you get that inspection report, the realtor will go through that inspection report with you, detailing everything that they may have found, so that way at that point we would negotiate different credits for you. And with that being said, Sandy is going to take over so that she can talk about, negotiations and how we get you guys to the actual closing table.
Next we have Sandy Mattel. Hi, everybody. So I am actually a seasoned licensed realtor. My name is Sandy McLeod Barman. I told her my age. So I actually started real estate in 2005. So I've been in the highs, the lows, and everything. What brought me into real estate was I had 3 daughters. My daughter has type 1 diabetes, and I couldn't have a typical job because she was sitting out the hospital. So I see real estate, the money was good, and I could take care of my kids. Whether dad was involved or I did it by myself. Once I first became a realtor, it was important for me to give my kids stability. So the first thing I did was I invested in myself. So I found a property and I made an offer. Because I would collect the commission, I knew that money was coming back to me, so I used that to roll that into my home. As far as, before I start to mention other stuff, let me tell you a little trick that I like to use. So a lot of people have money, but when they start calculating the down payment and the closing costs, they get scared. Don't be scared. With the down payment, of course, you have your money, they can assist you. With the closing costs, you can always increase the purchase price and get a dollar amount. When you increase the purchase price, it'll probably raise your mortgage 50, 100, $200 at most, correct? And what happens when you do that, you increase it, but then you tell the seller you want to sell a credit. So now you no longer have to have closing costs because you increased the purchase price, you have that money there to help you close. So you keep all that money that like the 30,000 you would have put in closing costs, you now keep that. It rolls over, and you may have extra money where money can get you seller credits and buy down your points, and now your mortgage that would have been 17, 1800, you probably could drop it down 15, 16. So that's where he comes in. With our real estate firm, we do a lot of things. We don't just take your money. We don't just throw all the horror stories. Crazy. We actually get to know who you are. You understand? We take you out. It becomes personal. Real estate is personal. Regardless of what people tell you, it becomes personal. You're in a person's life. It's stressful. Real estate is really not stressful. I closed the transaction in what? 9 days. People are renting. You can close the transaction with real estate faster than you can close now in South Florida with renting. Associations take 30 days. They require a lot of stuff. And it's not yours. Real estate is your home. You're doing the same thing. You're giving your tax returns, your bank statements, your ID. Nothing more. But what you need is a real estate agent that knows the field, knows the market, and is going to take your hand. With that being said, our firm is special because we have a young lady by the name of Dominique. Once you go into contract, and it's so simple, you will faint, and you will pass out, you wouldn't believe it, you will tell all your friends, I can't believe this, I can't believe because it's the truth. Once you go into contract, you find a house that you like, and you initially do the contract. You make the offer, and it's accepted. Once accepted, it's like Carly told you, you have your inspection. So typically, the day that you get your acceptance, you want to find your inspector, and you want to go within the first 7 days, have your inspector out. Then you have your money. And while you're doing the inspection and you give him all your documents, you want him to order the appraisal. That way you know that the house, that the offer that you made, it holds value because if you offer $350 and in the process you have the inspection might come out good, the appraisal might come back as fast as the inspection. Now you know the house is only worth $325. Back at the drawing table. Now you have room and leverage to negotiate. After you finish the negotiate, and Dominique has a timeline. I kid you not. You wake up every morning at 9 o'clock, and there's a timeline. And she takes out the guesswork. You know what documents need to be turned over. Everybody's in communication. You're on a group text, and it's a 1, 2, 3. You literally close, and you meet Donna. Donna takes you to the finish line. She has all your documents in order. She made sure the house is clean title. Everything is clear. And we celebrate. It's really simple. Buying is, to me, more simple at this point than renting. Because you know at the end of every year, your rent increases. Your mortgage doesn't increase. You know if you're late on your mortgage, you can work that out with your bank. If you're late on your rent, your landlord can throw you out. Like, you have a lot more when you own. So, just let us help you.
That the lady of estate. And then up next we have Donna, who's our real estate attorney, who will take you, and also the closing attorney, who will take you to the finish line. Donna.
Good afternoon, everyone. Thank you for coming. I understand my name is Donna Goose. I've been a real estate attorney since 2001. Graduated from St. Thomas University, which is now Benjamin Crump Law School. Woo-hoo, thank you. Anyway, so the lovely ladies and gentlemen from Belzine's Luxury Space, they explained to you basically how you get to purchase your property. Some of the things Sandy just said, I want to just clarify. The only way your mortgage can go up or down is if your taxes or insurance goes up. Other than that, we're always giving fixed loans, okay? Now, once you get the contract, Dominique, as I said, will get you, a timeline. First thing you have to do is get a deposit to me, okay? 3 days, very important, okay? Because if you don't get timelines on, things on time, you will be in default of your loan. And then sometimes sellers will say, okay, the contract is canceled. So what you want to do is always follow the timeline, listen to your realtors, okay? Now, the benefit of closing with a real estate attorney is that with a real estate attorney, we can do so much more for you than a title company. Because the title company, they cannot give you legal advice if there's something going on with the property. You can't ask them questions because if they provide you with legal advice, they're practicing law without a license, which is a crime in Florida. Okay? So I'm here to help you understand the process. Okay, if there's a problem with title, I can help clear that. Okay, if there's a problem with the contract, again, the realtors, they can come to me, ask me questions. What should we do? I'll guide them through that. Okay, so the process is, it's not as scary as, you know, people think. You have to take that step. Okay, owning real estate is creating generational wealth for your family. We've heard one of the young ladies said that her grandmother left her properties for her and her sister. She just created generational wealth for her grandchildren. I'm sure all of you want to do the same for your kids, okay? We're here to work you through that. I'm here if you do buy a property or you do inherit a property, I can walk you through the probate process. Again, the title company can't do that for you, okay? They will assess the value of the property. Sometimes you may have the property, but you don't want to live in it. Okay, contact one of the realtors. They can list it for you and get you the best deal possible. And I'm here to help you through the probate process as well and to get you closed, okay? So we negotiate the contracts for you, review the contracts. You know, if there's a question from your realtor, I'm here to help you. Once you get to closing, you must have title insurance. Does anybody know what title insurance is? Title insurance is for your protection, okay? It's a one-time fee that you pay at closing. It's not like having insurance on your property that you have to pay every year. This title insurance, what it does is, if there's an error, for whatever reason, you're protected, the underwriter will say, we will hire an attorney. You don't pay anything out of your pocket. We'll hire an attorney to fix whatever the problem is. Okay? Because sometimes maybe, you know, let's say, you know, a property you inherited through probate. It was a husband and wife, and I had a case like this where there's a husband and wife. They never got really divorced, and the husband married somebody else. And guess what? When he died, who's really the wife? That creates a title issue. So title issues cannot always be cleared by title companies. They'll just say, here's the issue, figure it out. I figure it out. I'm like Inspector Clouseau. I love figuring things out, okay? That's my job. I dig deep, and title is fun because you see so many different crazy stories. And let me tell you, you want an experienced attorney by your side, because not only will I act as your closing agent, I can also be your attorney. If you have to go with, let's say, a buyer's attorney, title company, you can always hire your own attorney to make sure you are protected, because everything is about protection. Because my belief is an ounce of prevention is better than a pound of cure. Because when you come to me early, it costs you less than when you come to me after the problem arises. Because you're going to pay, you know? So it's better to pay up front, you know, because real estate is a big investment. It's probably one of the biggest investments you're going to make in your life. Florida is one of the leading states where real estate is really booming. Okay? So if you're not jumping on this bandwagon, guys, I don't know what you're doing. Okay? Because even though, as they said, interest rate may be a little high right now, you buy now, interest rates are gonna go down. What goes up must come down, right? So you're not gonna be put into a loan that you cannot afford. You'll be put into a loan that you cannot afford, and when the interest rate goes down, you'll have enough equity in the property to go ahead and refinance. This team here will help you through that process, okay? And at the same time, I'm here to guide you to the finish line. I am the closer. I make things happen. That's my job. Okay? So I don't know if there's anything else that I need to add to that for you guys, but again, real estate is really important. Do this for your family, for your children, for your future, because that's how wealth is built. Okay? And then it's not only with, first time homes, you may want to do something with Airbnbs. You have to make sure that wherever the city that you're buying the property in allows it, there's so many restrictions. Again, if there's those issues, a real estate attorney can help you through that. Okay? Because you don't want to buy something you think you could do Airbnb to find out the city doesn't allow it. Okay? So invest in your real estate. We're the team for you, and we're here to walk you through the process. My name is Donna Goose, Law Office of Donna Hearn Goose, here at your service. Thank you.
Okay, so again, thank you all for coming out. It shows that you guys are serious about purchasing a home, because I always say, if you fail to plan, you plan to fail. But you guys showed up today, so that means that you guys are ready and you're ready to learn about the home buying process. I mean, if you guys choose to work with us, great. But if you guys choose to work with another realtor, just make sure that you choose a realtor that's actually working for your best interest. That's not choosing for the house, but actually choosing for you. It's like all of their experiences here, as you can tell, they don't really care, and they're just in it for them. I mean, Carlene had a horrible experience, but her selling of the home was a great experience, wasn't it? Yeah, because we sold her home, and she was really excited about that. And again, Yamani is here. Yamani actually met, like, I'm very particular about my lenders that I choose to represent my clients, whether it's a lender, whether it's a credit person, whether it's an inspector, the real estate attorney, appraiser, whoever it is that I choose to work with my clients, I have to actually would like for them to work for me, my mom, or somebody. It has to be personable, because it's like you guys are entrusting us to represent you. It's like we're your attorneys, but we're educating you, so you're trusting us, especially if it's your first time. So I actually met Yamani with working the deal. He was actually representing, I had a listing, and he was representing the buyer. He swindled me into getting some seller credit, but that's what you want your vendor to do. So we eventually closed that deal, and that's how we met. That was like 3-4 years ago. And then after that, we came again, and he had another buyer that ended up coming to me again. And I was like, hey, look, we keep running t-shirts doing deals, let's link it to business. And since then, it's been history. Like, he's really good. He's very informative, as you can see. He came up here, and I'm quite sure he gave you guys a lot of gems. And that's just a snippet. If you actually do a consultation with him, you'll be very amazed. And again, thank you guys so much for coming. We're going to still be around. We're still here. If you guys have any questions, anyone has questions, I know I told you guys to wait till the end. I'm sorry, Elijah, I can't ask questions, but y'all have our information. Belson's Luxury Estates at Instagram, Belson'sLuxuryEstates.com, 305-510-0303. Yes. So we just have a new agent, Shayna, that joined us. I didn't want to put her on the spot because she might be shy to speak, but next seminar she will definitely be here. Next time. Okay. So do you guys have any questions for us?
Yeah.
I wanted to ask you, because you said that you work for the city of North Miami. What do you do for the city of North Miami? If you don't mind coming up and explaining to us. And your name is?
My name is Dr. Maria Historia, and therefore Vicky.
Okay, Dr. Vicky.
Yes.
Okay.
And I am in the process to help people. If you are on eviction, they can give you $3,000
So what department do you work for in North Miami?
We are in the CRE.
Yeah, so you're in the housing department?
Yes.
Okay. Nice.
If you are, and we have, if you have an eviction, we can help you to get $3,000 to $5,000 to get to relocate.
Only in the city of North Miami.
Where if you live in the city of Miami. If you have your landlord raise the rent, we can pay the difference for you, even for 1 year. Okay, for 1 year. And we have a supermarket. We give you food every 2 weeks. It's free if you live in North Miami. It's free. If you are disabled, if you are disabled, I can bring you
Even if you're disabled, she could bring you food to your house.
And we have everything. We have rice, beans, oil, onions, everything. And it's a good sale. But we have chicken. We have chicken.
Okay.
So if you live in North Miami, feel free to go and 12300 8th Avenue, and you can submit your application.
Let me ask you, what if you were purchasing a home? Do you guys get any money for if someone wanted to purchase a house?
Yeah, for the first time home
Okay, and how much do they get?
they give you 40,000.
I know she said it, but I just wanted to say for the live of the people that did. Okay.
But you have to live in North
Yeah,
Miami.
and you have to purchase a house in North Miami.
33161. There is some pocket is not North
Yeah.
It's not in North Miami.
Okay.
So the first time,
For the first time when you buy the house?
Yeah, first time you buy.
Okay. So just like City of North, that's why I tell people that you should go to your different cities and find out information. Because just like the city of North Miami have that information, other cities have other stuff as well. I know you know somebody in the city of Miramar.
Miramar, they're giving about $70,000. I don't know if they've run out, but her name is Catherine Randall. So call Catherine Randall at City of Miramar. See if there's any more first-time home buyer money.
Okay, so that's the thing. When you go to different cities, if you're looking, like if you have a particular city where you want to purchase your home in, you should always contact the city and see if there's funds available. Like she said, like Donna said, sometimes the funds run out. But like Yamani was saying earlier, Miami-Dade County, I believe, is the only place that the funds doesn't run out. But then, like, if you were purchasing still in Miami-Dade County and then you use a program with City of North Miami, would they be able to pile that up on top? See? So just go into the different cities and see what different programs they have. Sometimes there's a waiting list, but, you know, you had a question?
So, like, for example, city of Miramar. Okay.
Hi. Okay.
In the city of Miramar, do you have to get a certain time in order to get the funds?
I don't know.
Like a process that you want to in order to get to the closing table of theirs.
So it depends on the city. Some cities do require that you apply in advance. Some cities require you to have so like, if you guys have some questions in regards to like specific cities, which cities have funds available, which cities require what, you guys can always reach out to me directly. Like I said, share my contact information, and it does vary from city to city. So I don't want you guys to be too worried about the specifics of each city, because when you're looking to start that process with us, again, we're gonna hold your hand through this whole process. So any time that you guys are going on showing properties when anybody is here, right? Everybody here is gonna be working when they say, right? They'll coordinate with myself, right, to ensure that wherever it is that you guys are looking, there are funds available, and we are going to make sure that when you're going through that process, we're gonna do that for you. So you don't have to worry about actually going us as the mortgage broker, we're going to work with you in submitting those documents to the city. So you guys don't necessarily have to worry about having all that stuff. Having all that stuff up front. The process is going to be smooth from the city to the fund. Everything we handle for you step by step. So, just to kind of circle back a little bit, you guys don't have money to worry about it, right? That's not an issue, right? There's down payments to do. Even pray. Pray is something that I tell people all the time. It's probably the most easily manipulated, right? I can look at your credit today and tell you to pay off one thing, $50, and we're going to do what's called a rapid score, and I can force the Bureau of Living within 2 to 3 business days to update your credit score and boost it up 50 points or 100 points, you know? So, I mean, the key is not one or the other, right? You need to see either assets or we need to see income, right? You don't have necessarily the income to report again. There's programs out there that don't require traditional documentation, right? As far as like pay stubs and tax returns, right? But you do need to put up a little bit more money to have some assets, right? And if you have the income, right, let's say you have a job and you make good income, but you don't necessarily have the assets, again, that's not an issue because there are programs out there where we can get you the money for the down payment. Working with, you know, one of these experienced lovely ladies up here, they can negotiate a contract and get the seller to pay for your closing costs, you know? And going back to kind of what Sandy said, you know, it's not gonna increase necessarily even your monthly payment for you to say, hey, I'm willing to pay $15,000 more for me to get my closing costs paid at $15,000, right? Because for every $1,000, just so you guys know, for every $1,000 right now that you borrow, it's $7 a month based on today's interest rates, right? So essentially, if you're offering $15,000 more, right, to have a seller pay for all your closing costs, right, it's not going to be increasing your payment by more than almost $100, you know, and really maybe even a little bit less because again, remember, you still have your down payment out of that $15,000 put down, and so have your 3 or your 3.5%. That's coming from your own money. So yeah, no, that was a little bit of a long answer, but.
And also, if you have family members that want to give you money, that's also acceptable. They have to, I believe they have to source it.
Yeah. So yeah, any family that has money, we only need to see 1 month worth of their bank statements to just ensure that the money was already in the account, right? Because whenever we're using funds, right, you have to, again, be able to see the documents and show where that money's coming from. And even if they don't necessarily have the money in the account, let's say they're depositing it because they sold the property or sold the car and then use some of that money to help you out. As long as we can source it, right? As long as we have some kind of paper trail as to where that money came from, maybe or it's a bill of sale or something, then we can use those funds.
I want to say one thing too. I know we talk about, because I know a lot of people are islanders, so, you know, there's things like susu or partner, you know, with eso, however you want to call it. When you get that big money, you know, I don't know what you're supposed to do with it, but the lawsuit. But he can source it, so, you know, just talk to your mortgage broker before you find the house, before you deposit that money, so that he explains to you exactly what to do. Because, you know, that can really throw a monkey wrench in the whole process, okay?
Wait, can I ask you something? And to your question, all you need to do is find a house and let it do the rest. So once you know the areas, we'll tell you what money is there, just let us hold your hand. That's it. Just find a house, and that's the hard part, is to find a dream home, and once you find it, just sit back. That's it.
Finding a home.
Yes.
It's hard. Like if you want back in the day, you might drive around and say, oh, this house is selling, this house is selling. How can you find those homes now?
It's hard. You're gonna find out what's the particular area, how far you're gonna be from work. Is there a school district coming up, and she's gonna put you on. All the government.
Now, everybody, nowadays, it's still over.
Okay. The thing about the Zillow, guys, sometimes those properties are not even available, that's one. Two, understand, as buyers, the realtor service to you is pretty much free because the seller pays for it. So why would you not have, you know, select the realtor? It doesn't cost you anything. Maybe it's transaction fee, but that's it. You're not paying 3%. Why should you do all the hard work? Let them do the work for you.
A lot of Cincinnati landlords. I've done, because of Section 8 client, and it's that because they took advantage of them the most, because they know the need. And he had her put down $500 here for a holding fee, and said, oh, well, you're gonna give us the deposit in a week, I'm giving the property to somebody else. Now, she wouldn't have done that if she wouldn't have trusted the process and let me continue helping her, because she did try to do it on her own. That's dangerous. So if you make the decision to work with a realtor, stick to it, trust the process. As long as you do what you need to do, we can do everything else. We have access to a system that shows every available property in the state of Florida. It's massive, and the only people who have access to it are realtors. So on average, 95% of first-time buyers, whether it's renting or buying, they try to look online, and the average process takes about 12 weeks. With a realtor, what? We could do it that same day, just start sending you properties. You say, oh, I like this one, 30 days.
But don't realtor, what do you call it, realtor bounce? If you have one realtor,
Yes.
stick with one realtor. Because chances are, we're all showing you the same property. We all live in Miami, Broward, the same stuff pops up. So when you bounce from realtor to realtor to realtor, it's nightmare. And nobody wants to work with you because now you're wasting people's time.
So that concludes our seminar. Of course, we'll still be around and answer questions. We have refreshments catered by the talented Chef White. So you can go out there and have some food, have some champagne, water, and then we'll still be around for any questions and stuff. Okay? Thank you guys so much for coming out.
Thank you, guys.
Thank you. That's it. Thank you.
Say hi to you.